Copper is one of those things that quietly runs our entire modern world. I mean, it's in our phones, it's in our cars, our power grids, everywhere. But lately, it's been making a lot of noise, with its price hitting an all-time high. So what on earth is causing this fever? Let's get into it.
So this is the number that sent some serious shockwaves to the global markets. On November 28, 2025, copper futures on the London Metal Exchange just surged to this historic peak, $5.19 a pound. And look, this wasn't just some small jump. This was a massive signal that something fundamental is changing in the global economy.
To really get why this matters so much, we need to introduce you to Dr. Copper. That's the nickname traders and economists have for it because copper's price is like taking the pulse of the global economy's health. When demand for construction and electronics and manufacturing is humming along, the doctor's price goes up. So, the big question we have to ask is, what is this record-breaking fever trying to tell us?
All right, in this explainer, we're going to diagnose this whole situation by looking at three huge forces that are all colliding at once. A really critical supply squeeze, an unprecedented boom in demand from all these new technologies, and of course, a geopolitical wildcard that's just pouring fuel on the fire. And then we'll wrap up by looking at what this new price of progress really means for all of us.
Okay, first up, let's look at the supply side of the equation, because honestly, a crisis has been brewing here for years. The simple truth is, the world is seriously struggling to pull enough copper out of the ground to meet its needs.
And a huge part of the problem is just how concentrated copper production is. Get this. A massive 40% of the world's entire supply comes from just one country, Chile. Now, when so much of such a critical resource is in just a few places, the whole global supply chain becomes incredibly fragile. Any little problem in one of these key regions can have this giant ripple effect on everyone.
And unfortunately, problems are exactly what we're seeing. Major mines in Chile are dealing with strikes and equipment breaking down. Indonesia is still feeling the after effects of the pandemic. And over in the DRC, key projects have been hit with major supply chain interruptions. And if that wasn't enough, miners are demanding way higher prices. We're talking up to 20% more just to process the ore. It's like a bottleneck at every single turn.
So you're probably thinking, well, why not just open new mines? And here's the real kicker. It takes, on average, 10 to 15 years to get a new copper mine from just finding the stuff to actually producing it. You can't just flip a switch. This incredibly long lead time means that supply just can't respond quickly to these sudden surges in demand.
The result of all this is that we're basically running out of our safety net. Global stockpiles of copper have just dwindled to less than 4 weeks of demand coverage. I mean, that is an astonishingly low level. It means there's practically no spare capacity in the system to absorb any more shocks. We're running on empty.
And hey, don't just take my word for it. One of the world's largest commodity trading houses, Mercuria Energy Group, they put it very bluntly. They called this the tightest market they have ever seen in their careers, with, and I quote, the warning lights flashing red. So yeah, the supply well is running dangerously dry. All right, now let's flip over to the other side of the ledger. At the exact same moment that supply is being choked off, demand is absolutely exploding. And it's being driven by the two biggest technological revolutions of our time, the green energy transition and artificial intelligence.
This right here is one of the clearest examples of the shift. Your standard gas-powered car, it needs about 23 kilograms of copper. But an electric vehicle, it needs 83 kilograms. That is more than 3.5 times as much. So every single EV that rolls off the assembly line represents a massive step up in how much copper we need.
This demand boom is really built on three main pillars. First, you've got the energy transition. And that's not just EVs, but also wind turbines, solar panels, all the wiring for renewable energy. Second is the AI revolution, which needs this massive build-out of copper-hungry data centers. And third, we're modernizing aging power grids all over the world to handle all this new electricity demand. So we've got a historic supply crunch and a historic demand boom. That alone is a perfect storm. But then, in July of 2025, geopolitics threw a massive wildcard into the mix. The United States announced a new 50% tariff on imported copper. And this raises a really critical question for a global market that's already stretched to its absolute limit. What happens when you suddenly, artificially, inflate the cost of a critical material by half? Well, the direct impact is simple, but it's also pretty brutal. For every ton of copper that costs, say, $10,000 on the world market, American companies would now have to fork over $15,000.
This instantly makes every electric vehicle, every grid upgrade, and every new data center in the US that much more expensive.
The market's reaction was, let's just say, swift and clear. Analysts immediately dubbed the policy a guanshui jiadan, which translates to tariff bomb. And that term, it just perfectly captures the potential for this one policy move to basically detonate across an already fragile global supply chain, messing up trade flows and driving global prices even higher.
So let's put this all together. You've got a structural supply shortage, a generational demand boom, and a geopolitical shock. What does this new era of super expensive copper actually mean for all of us?
We have seen copper price spikes before. They're often called supercycles. The one back in the 2000s was all about China's industrial boom. The one in 2021 was part of the post-pandemic recovery. But this 2025 cycle, it's different. It's not just one thing. It's the convergence of all three: supply, demand, and policy, creating a situation that's way more complex and could last a lot longer.
And that really leaves us with a final, crucial question. Copper isn't just another commodity. It's basically the nervous system of the future we're all trying to build, a future powered by green energy and artificial intelligence. This price fever is telling us that the raw materials for that future are becoming scarcer and more contested than ever. So the ultimate question is, are we prepared to pay the new price of progress?